Okay, good morning, everyone. Welcome to this live intraday strategy webinar. We just got the release of non-farm productivity from the United States coming in at 3.3 ahead of non-farm payrolls. Unit labor costs, interestingly enough, have shown a little bit steeper of a decline, negative 1.4%, ahead of obviously Friday's more encompassing, broadly, highly anticipated non-farm payroll report. Good to be with you guys here this morning. Today is Wednesday, September 2nd. We got a lot to go over. I want to leave some time at the end. If you guys have questions, I see some interesting questions here ahead of the webinar, guys. Mark, Lavender, Deepesh, definitely feel free to throw out any more questions that you have as we go through this session. Our focus has typically, or mostly rather, I should say, been on the euro pairs, guys. So yesterday's scalp or intraday post had the euro dollar, euro yen, both of which been a little bit lackluster in overnight trade, but still coming into interesting areas of support. Also taking a look at euro pound, that thing looks poised for a move as well. Dollar yen is on the menu, and obviously the dollar crosses here as we get into Friday's major event risk. So let's jump right into the charts. I just want to go over this question here from Deepesh saying, this week has been a challenge. I see what you mean by the monthly openings, and certainly, Deepesh, this is one of the things that I like to stay on the sides for. A lot of these moves early in the month can be on low liquidity. They can be on rebalancing late in the month. And, I tend to be a little bit more of a reserve. That's why that post on Sunday, if you noticed, kind of told you guys anything that we take for the next couple of days is probably going to be a half, if not a third leverage size of what we typically take per scalp. Just as we get through those first couple of days, get those ranges going, and we can get a little bit more of a confident move on the directional bias. Sound is cutting out for a few seconds again, Mark is saying. Is everyone getting that as well, guys? Yes, noticed it here too. Yeah, okay. Give me one sec. Okay, see if that helps, guys. Keep me updated if that continues to be an issue. It might be actually a bandwidth issue here, but we'll take a look. Dale says, "Hey, Mike, you ever sleep?" Not much, not as much as I should. I'll tell you that much right now, Dale. But I don't know. I spent most of my years on the trade desk in overnight trade in Tokyo. So in fact, that still tends to be my most comfortable session. A lot of the trades have been working out in the Euro crossover as Europe closes into the US Open. So around that sweet spot, 10 o'clock, 11 o'clock, as Euro's coming offline, the opening range for US is kind of working its way through. That's also a great time period. But Dale, the entries on the sort of Sydney Asia Open have been, most of my years on the desk. So I'll tend to put out the post at that time. All right, guys, I made some quick tweaks. If you still have that problem with the sound, please keep me updated. But let's jump right in. Again, we're not going to really stress this number right now. The real highly anticipated number is obviously non-farm payrolls over the next couple of days. Don't forget, by the way, today at 2 o'clock, you do get the release of the Fed's beige book, which is obviously an updated assessment from the Fed's 12 districts as it pertains to employment, inflation, and such. So that'll be coming out at 2 o'clock. But for the majors, one thing we want to take a look at is Aussie trade balance. That'll be out later tonight. You do also have, with regards to the euro, obviously the ECB on tap tomorrow morning. We'll be looking for much more dovish commentary there on the back of what we saw from the global sort of risk sell-off last week and over the last couple of weeks. It's going to be very hard to envision them coming out with a more constructive attitude. So definitely we'll be looking for that tomorrow morning. As we open up the webinar, guys, the presser typically starts at 8:30. So we'll be giving you highlights of what Mario Draghi is saying. And we'll be watching these euro crosses. I thought I'd give you an update on that. But where we stand on the euro so far is right here. So here's what we looked like yesterday, a couple hours into the Asia trade session. We were just making it below that 112.97. That green level, guys, continues to change on a daily basis. This is just the 200-day moving average. Okay, I'm just following it along. And really a close above that would give us a little bit more conviction of the resumption trade here for euro dollar. Relative performance today does have most of the major counterparts weaker against the greenback, which is moving higher. We'll go over some interesting setups here in the CAD. Not really a big fan of trying to press that too much right now, but certainly in the back of some of the data that we've been getting. And if the dollar, well, let me take a step back. If we do get dollar weakness, this is probably one of the ones we'd want to attack most aggressively just because it is at such an extreme high, but that remains to be seen yet. So we'll take a look at that. All right, let's jump into the charts. So I'm sorry, let me just load the right chart here for the equities. Okay, so a quick look at the dollar index before we move off. I just want to point out this trendline resistance dating back to the yearly high is coming into play. But really, the major level that we were talking about is still going to be that 12,071, which not only was last month's opening range high, but also the reversal day close that we made after the yearly high. So the yearly high was marked on the 13th of April. The reversal day closed right there at 1271. That was the exact high that we made last month. So if we do continue higher, you also have that median line off the lows, which coincides right in that region. Clear resistance targets here for the upside on the dollar index. Despite the rally and the V-shaped recovery off the lows, guys, I do want to point out a couple of things. We've seen these before. Okay, it doesn't necessarily mean we want to be off to the races looking for 1216 yet, or 12160 yet. And also, one thing that we've continued to watch and we've talked about for months now is the fact that momentum has been unable to clear this 60 region with multiple dips sub 40, multiple dips sub 40. So as long as this condition holds, I'm not really going to be looking to, initiate any new long exposure on the dollar. That being said, there's nothing wrong with scalping some of the dollar crosses on a stretch here, but I just want to be mindful of these factors that we're looking at. So the real play here would be if we break through 60 and the move through 1271, that would be a clear-cut directional break to the upside. You're looking basically for the high day close at 12,123. That being said, the same support region that we noted yesterday, remember how we had probed right through it and pulled back up, is still in play. So you're basically looking at 1,200 or 12,000 rather as your near-term support and near-term bullish invalidation level. Here's what the dollar index looks like on the 30-minute charts. And again, it's been just kind of a slow grind higher. This is what I was looking at as the opening range high for the week. So I would have liked to see a little bit more of a definitive break on this move. The fact that you're not seeing momentum follow through, and in fact, you're still continuing to get some ongoing divergence here as price pushes into a new high, new high, new high. Remember, on a close basis, so we're only looking at this on a line chart without all that nonsense. And you can see, it still puts us at risk near term. Probably this might be the more operative trigger to work with. So we'll be watching those. So the point being, if this was going to be a legitimate opening range break for the week, I would have liked to see that give us a little bit more of an upside thrust. The fact that we haven't could mean, again, that this thing is kind of teetering out. Either way, guys, it's the first couple of days of the month. You're coming into major event risk for the US dollar on Friday. Just be cautious on this. We'll be watching. The major break would be 11,980. That would mark a little bit more of a near-term correction to the downside, targeting 11,956. Monthly open was for August, by the way. This is the August monthly open. All right. So let's move right into the operative trades that we can actually trade here stateside, and euro dollar looks like this right now. So ahead of ECB, there's going to be a lot of back and forth with the euro. This is very, very typical of the euro. So if you're trading this pair, just be mindful of that. A lot of these majors, specifically heading into the major event risk or the central bank rate decisions, will get a lot of cleaning out, a lot of repositioning, and sometimes you'll see some fake outs right ahead of the release. Long story short, I was just messaging back and forth with Jamie on this one. Near-term support at 112.42. The levels haven't changed. That's going to be near-term support, and also the near-term, bullish invalidation is just below now. So a drop below here, and we'd inevitably be looking for that drop into 11.55, basically the 111 handle, and that would be, I think, a perfect or a region of which we'd start to look for long exposure again. Keeping in mind the daily chart. So I know there's a lot going on here, guys, but let me just walk you through it. We've gone over this a couple of times, but this is the operative pitchfork that we're working in. Within that confines of this formation, this is what we're looking at. You made a brief stretch back above that 200-day moving average yesterday. We broke back below. On the pullback, you'd look to find some support right around that lower median line parallel. And on the scalp chart, that's this line. Okay, so looks like we're going to make a move on that support. Near term, as we head into the U.S. session, we'll be looking for possible long exposures here. If it doesn't hold, or if you do see a downside break beyond that, I wouldn't necessarily be looking to get too aggressive on the shorts. We might jump into something, but a drop into this region would be having us look back for the long side on the euro. Also, keeping in mind one objective thing, this is what I was thinking. I couldn't keep my mind in check there. This formation off of last week's stretch lows that you made there has been in place since the start of the week, and it's been pretty darn clean. We turned right at the median line overnight trade. Here's the downside. That support right at 12.39, 12.42 came right on the break back below. Okay, so we tagged that literally almost to the pip. Quick little rebound, 200-day moving average still in check. If we break back below, look for that lower median line parallel that's just above the 112 handle. And then again, we'd start to look for long exposure again down here. Questions on the euro. Also from the momentum signature on a intraday standpoint, we started off the week pretty constructive. 40 hold, 60 break, 70 break keeps us looking higher. Here's the 40 check. If you break below that region, and specifically if momentum does make it sub 40, that'd be the first break of the week, and certainly would suggest near term momentum is waning on the long side. Mario says, I was going to take a short on Eurodollar at 112.90, but I couldn't find any triggers, so I ended up taking a long at 112.56 with a stop at Tokyo's low for a much better risk to reward. Okay, let's do this. Let me bring up the intraday chart, and Mario, we'll walk through the triggers together, and I'll show you what would have triggered short exposure up there. There was actually something last night. I missed it. By the time I saw it, it was already played out, so I'm not about to start chasing, but I do want to show it to you. Let me just log in here. Okay. Here's the Eurodollar 5-minute. Stop against the Tokyo low. So you're almost there right now on this break. And again, we might actually move through that. So I just keep that stop there. The drop below would certainly risk a little bit more of a move. But at 12.90s, I see what you're talking about. So on this one here was the trigger. This is the one that I was looking at last night, and I kind of just snoozed into the U.S. close. Here's the Asia pack one. Okay, and this broke just ahead of or heading into the Sydney Open, right near that 112 area that you were looking for. So a couple of things that I was looking at last night was this. Do you see on the 5-minute you're getting divergence into the highs? Divergence into a trigger break. You probably heard me say it here, guys, a million times, but just in case you're not tired of hearing it, 9 times out of 10 I'll take that. Okay, as long as we're trading into resistance or into support, 9 times out of 10, divergence into a trigger break will tend to yield something. Now, this is not barring what's happening in price action, right? What we're seeing in the momentum signature is very important to note. This means nothing. It's price action that's guiding our decision making. This is just giving us what the near-term momentum profile looks like. So obviously you're coming into the highs. This is just the median line parallel we were talking about yesterday in the update that if we make it back below that 200-day moving average, look for a drop back into that 112.40, 112.39 region, and you should be looking for near-term short triggers. So the long that you took at 56 against the Tokyo low, while it does make sense, right? I just want to note a couple of things. After we broke that trigger, what happened in the momentum signature? We broke back below 40, and then on subsequent rebound, 60s resistance, 60s resistance, 40 break, 60s resistance. This should tell you something, Mario, near term, right? That the near term momentum profile has turned over, right? Now, if we had made that trigger break and this thing held 40 as support and came right back through 60, well, then you'd look to buy the pullback, right? That would make sense. But on the fact that we broke 40, 60 held as resistance, that kind of has me off the longs altogether. Does that make sense, Mario, how you sort of walk through that process? The long I took was at the London Open. So here's the long that you took, right up here at 56, right? Against the Tokyo low. Okay, a move like this, I'm with you actually. A move like this from a scalper's perspective, that's fine. Are you out of that, Mario? I just want to make sure. He says yes. Okay, undo everything I just said. I thought you're on the premise that you were still in that position. That was actually a perfect scalp, Mario. 100%. This is counter trend trade near term. So on a scalp like this, I would be trading half leverage of the operative sort of near term directional bias. But absolutely, absolutely. In and of itself, the 40 break on the way up by itself sometimes is an alleviation, is a blow off to the down, to the sell off or the downside move, as it were. But nice trigger break there, stop against the lows, looking for about 36 pips. Again, when you're looking to play the counter trend trade, I wouldn't get too aggressive on trying to capture the entire 25% of the daily ATR. But certainly on a top side stretch there, yeah, not bad. Not bad. You're seeing the beauty of it, right, Mario? The quickness of it. So you can definitely play these rebounds 100%. After that 60 hold, right, in momentum to the upside, this break below 50 with a stop against that high gives you still underneath a 30 pip stop, and here you are with another 36 pip drop. So just a quick walkthrough on how we would work these near-term RSI triggers. I think my RSI is at 14, so it was a break of the 30 level, Mario says. Oh, right on. You're saying on the trigger. Right on, Mario. Nice trade, man. Nice trade. So coming in some near-term support, again, if we break below this, we can look to sell rallies really nimbly, as it were, ahead of the ECB, looking for a drop into 111, but that's going to be a major key target. It's going to be a major key target. Any questions on the euro? Graham says, so how do you feel about this euro dollar 5-minute chart now? Um, is there divergence at support against the London Open? Okay, so we can't make an assumption about divergence, Graham, until we have the close of those candles. You know what I mean? So yeah, you were just saying there was divergence. Here, we're just breaking the divergence right now. If you're talking about this divergence, again, it's too close to call. And ahead of when you're just setting the opening range for US, I don't want to make any presumptions about where the range open low and highs are going to be. Kind of need to see that play out, Graham. So I'd rather be holding on to shorts right now than trying to look for new longs. Does that make sense? There is a long trigger. Don't get me wrong. Here it is on the 5. That's what I'd be looking at. But I would need some basing first. So if we hold the US opening range here, momentum sort of rebounds off 30, breaks through the resistance, a stop against the low for a long might be a good way to play the rebound. But as it stands right now, we just went over it, right? The momentum profile is still bearish. 60 break or 40 break, 60 hold, 40 break, 60 hold, 40 break. I'd rather be selling rallies right now. Does that make sense, Graham? I just want to make sure we're on the same page. He says, agree, momentum bearish and trigger may not be met. Yeah, so we'll keep that in mind. And a lot of this is just sort of waiting for the cherry-picked setups. Um, that's the beauty of it, guys. We don't need to make longer term assumptions. We can really play the levels as they come. So intraday, and especially like a market like this where everything's schizo, you see a one-day market's up 500 points, same day session goes down, back up. These types of things, we want to be nimble, and we kind of just want to cherry pick the setups. You can look at my charts and you can see all of these setups. By no means, guys, am I anywhere near trading all of these. Out of all of these, if I take 2 or 3 pairs on a day, that's a big day. Obviously, a week like last week, there were days where we walked out of the office, in 15 trades and out. But when we're opening up the month, major event risk, you're heading into a thin liquidity condition as you head into Friday. Obviously, the long weekend here in the United States, going into Labor Day weekend, um, is likely to be a little bit trickier as well. So, do like the euro levels though, still look pretty good. Eileen says, like the questions this morning, always like to hear the basics again. Bring them up, guys. Feel free. You're in the right place. You're in the right place. All right, so that is the euro. We will come back to this throughout the session. I do want to kind of gauge to see if we make a move here below. And again, this is the median line near 112 is really what I'm a little bit more interested in near term. I think if that gives out, be a lot more conviction for the short trades or the short scalps into this region. If it holds, break back above this median line, would certainly look for that rally into 113.60, 113.66 that we talked about. Big region of resistance. All right, moving right along. So that is the euro dollar. Other one I went over yesterday, euro Aussie. This was right on the back of the disappointing GDP numbers that we got. So Australian GDP came out last night, weaker than expected, and the Aussie hasn't had much luck with getting good data to take off some of the bearish sentiment that's been on it. Really quick segue just before we go over Euro Aus. Here's what the Aussie dollar looks like. Obviously, it got a spike low into that release. People are going to be obviously starting to price in further easing from the RBA. We heard them continue to suggest that they remain poised for further action if there is or if it's necessary. Long story short, that 2001 trendline support, we're sort of still dilly-dallying right there. And if this is the legit break below, boy, oh boy, this thing could be in serious trouble. I don't want to make any assumptions, but I kind of just wanted to point out where the Aussie's trading at this point. Haven't taken any positions on Aussie dollar in quite some time, but the risk for this thing to just completely fall off the side of the planet here is there, and that exists as long as we hold below essentially 71, 70, 88. Okay. Also, momentum is technically still below 30. And remember, when the market is in this condition, this is free fall, okay, zone. When markets are in oversold, despite, common directive, which is, oh, buy the oversold, absolutely not. We go over this stuff all the time here. That's the biggest misconception ever in oversold. This just means that the market has that much force behind it that it was able to draw the signature into oversold condition. So as long as this condition holds, the propensity for the market and price to continue to drop is there. We're still holding sub 30. We'll see if we can get that recovery. But the major near-term resistance for the Aussie is still into this region right here. I know it's a little messy, guys, but right around 71.50, that lower median line parallel for the formation we've been following there for a couple of years now, since October 2013. So with that in mind, the fact that euro could have more downside, but we have a little bit of a structure. A lot of these times when you get the blow off, and I even said that yesterday in Euro Aus, this could be the blow off that we were sort of looking for the near-term pullback that would allow us to get back on the long side. Broadly speaking, Euro Aus has actually been super clean. This formation has really called price action very, very nice. The median line break that we saw late last month, the high came right into the upper median line parallel, the pullback right back into the median line, and here we are. Okay, momentum, just also wanted to point out, You saw a quick trigger break and it pulled right back above it. We'd want to see that back below 60. Here's what it looks like on the intraday. Here's what it looked like last night. So you got the RBA, not the RBA, excuse me, the Aussie GDP numbers, again, sparking a real quick sell-off in the Aussie, popped Euro Aussie into the highs. This was the near-term bullish invalidation. Okay, the immediate bullish invalidation means a break below here would be looking to play into the parallel, and this is where you'd look for long exposure again. You kind of dilly-dallied right through the median line. So we're not going to really stress that anymore, but the support barrier still holds, and that's the 160 handle essentially. So a quick dribble below that. Long story short, we'd need to break to the downside of this formation to get a little bit more of a steeper correction back towards 58.30, 58.11, and again, area of which we'd start to look for a little bit more concrete support. Not really excited to play this too aggressively. Remember, this is a wide range scalp. So we're not talking about 30 pips. We're talking about nearly 70 pips per scalp. So your stops can be a little bit more comfortable in that you can kind of push them against major levels. But obviously the implications of a wrong trade on this are going to kind of hurt. So be a little prudent. I'd like to see a downside break of this formation to start selling rallies into key support at 58.30. 58.30 is where I'd start to look possibly for some long side plays. If you remember last week, we were talking about this, and this was the operative formation we were working on. In fact, I think I put a piece on this on Daily FX as well. The break below this key support shifted our bias to the downside. Early in the week, this was the opening range high, and the break above shifted our focus back to the upside, right? So now, again, you just missed the upper median line parallel. At the end of the day, as long as we're in this formation, you're still constructive. Are you looking for long triggers into support here? But ECB on tap tomorrow. Probably not going to be looking to play this as aggressively. If I am, again, remember, leverage lighter here with a 68 pip ATR. Mike, where's support on Euro Dollar? It keeps going down, says Raj. Raj, we just went over that. I'm not sure if you kind of just jumped in. But near-term support right above 112. Like I said, that median line off the lows. Raj, the setup is highlighted on yesterday's intraday post as far as all the levels to the downside here on the Euro. Any questions on Euro Aus before we move on? You're basically looking for a resolution to this 160, 160, 128 range. A little bit wider of 120, 130 pip range, but again, so is the ATR. And on this one, actually, the triggers tend to be a little bit more abrupt. Okay, so use some caution on this. Which is the one I was looking at this morning. Remember, typically your triggers will always suit you best or always serve you best if you take them off the high in price, not necessarily the high in the oscillator. A lot of times you might see me doing that in the reports just to highlight the divergence, like this, higher high, lower high. But the triggers typically, again, nothing's 100% all the time, but typically will work better off of the highs in price. But this is your deepest pullback in momentum since the lows. And you're eyeing near-term support right there to that median line. Hey, Kelly, great to see you. Says, hey, can you school us where to sell the pound yen? Thanks, pal. Let me do this, Kelly. I'll definitely take a look at pound yen. I just want to go over euro pound real quick because we've gone over the euro crosses. I want to kind of stick with the theme heading into the ECB tomorrow. So you might have seen on the radar charts yesterday, a move on the euro pound. Typically not my favorite trade. You might have heard me call it the grandpa trade a couple of times over the last years. But if the setup's there, the setup is there. And here's what we looked like last night. Very similar to what we're seeing in Euro Aussie, oddly enough. The play was if we break below 73.58 to really look to sell this a little bit more aggressively near term towards the 73 handle, towards this level. you might have heard some skepticism in my voice with the breakdown there, in that, it does seem to be a very elegant design on the intraday charts. Again, if I zoom this out, I just don't know that we have, or yesterday we didn't know that we had all the conviction to be using this type of formation. Because we can draw all the pitchforks that we want, guys, until we get a validation of a rebound or a reversal or something off of one of these slopes. You don't really know if it's in play, right? So we drew this yesterday with the hopes of, you know what, let's see if this formation is in play. It's too elegant, looks too perfect to play out, but that's why we have it on the radar. Well, guess what? On the rally and overnight trade, look where we found resistance. Pretty darn close to that upper median line parallel. Also, we noted that 73.86 level, well, that's the highs from June. So right off the bat, you have conviction that at least near term, you saw a really good response off that region. The support or the fake break, the false break that we got here in overnight trade, this was right in the open of Europe before it blasted right into that high again. Sort of being tested one more time, and it still looks on par essentially to do what we were looking to make it do last night. So initial targets with a move lower here, basically taking to the 73 handle. Remember, these are sterling pips, so while the ATR is only about 21 pips per scalp, from a P&L standpoint, it has larger implications, right? As they are pound pips. So look for that support near term at 73 rather. Major key support right at the median line, which comes in line with that key range 72.60, 72.70 here over the next few into the close basically of US trade today. Near term bearish invalidation gets dropped right to that same region. Okay, so we'll drop that down to 73.86 at this point for euro pound. Any questions? And the momentum signature above 60. It's your first 40 break after holding 40 throughout the session of London and New York yesterday. Resistance hold at 60. Here's your 40 break once more. Near-term momentum outlook still looks pretty bearish on this. Okay, and in fact, sometimes on the 5-minute charts, you can even give it some structure to help give us some guidance in price. And if we do that, you can see really nice slow performance here. A break of the median line testing as resistance. Looks like it's going to hold near term. You'd look for a target right around 73.30 on a downside move beyond this. Oh, look at that. US lows yesterday come in at 73.20. All right. Okay, moving right along. I see a lot of questions here on the yen, so we'll definitely take a look at that. Mike, can you take a look at dollar yen, please? Absolutely. Here's what dollar yen looks like on the daily. It's getting kind of ugly, as it typically does. The abomination back at its game, trying to wash out all these weak hands. Near-term resistance at the median line, backed by the 200-day moving average, still 120.75, same region that we talked about earlier in the week. On Monday's webinar, momentum signature right back into this resistance level. So here's what it looks like on the intraday. I guess is the only thing that offers some clarity for me. Immediate resistance with basic trendline resistance right off the weekly high. Nothing fancy there. And honestly, if we break through that, guys, specifically that 120.80, 120.75 region, 200-day moving average, I'd be neutral. I really wouldn't even want to mess with this thing if we get higher beyond that. This is sort of where I want to see resistance hold. This is where I'd like to see some short triggers give out. And if it doesn't, I don't really want to fight this anymore at this point. So dollar yen, Looks poised for a possible short. Again, yesterday it looked like this was just sort of a simple initial opening range break. So a hold here, hold in 60 in momentum is sort of what would put me back on the bearish path. The one thing I don't like about dollar yen, by the way, guys, is just that it's been unable to offer any like clear longer term structure to the near term picture. Besides just basic trend lines here, because of that spike low and the sort of mutter higher that you saw later last week. The 50 is good, 38's there, 618's good. Take care of the 6. There we go. So these are near-term targets. This is sort of a key sweet zone here. Major resistance. Remember, this is the 200-day moving average, 618, 50% retracement of the decline off the highs for the week. And trendline resistance off the weekly high. Multiple support triggers on tap. If we blast through 60 in momentum and make it through the upside of this, the bearish sort of near-term bias is going to be invalidated. Raj, does that help on dollar yen? So watch for near-term resistance here heading into 120.50, 120.77. We'll be looking for short triggers up there. The support that you need to get under is still 119.56. At this point, you have that median line off the highs, the swing high from the 27th as well. So that's your downside target. Subsequent break takes you down here. But this would be sort of near-term bearish invalidation in my eyes. So Raj, let me know if that helps on dollar yen. Outlook hasn't really changed on that one still. Let's see what the let's a 1 minute chart. Okay, could be in play here. And that would give you sort of a support break right around 120.15. Yeah, too near term to tell, guys, but sometimes I'll just put that on there for just for guidance to watch near term price action. But could see that stretch higher, might offer a nice short entry as you get into US trade. Questions on dollar yen? When there is time, SPX, please. Head and shoulders on the 30 minute, says Mark Haverman. Bernard wants to look at the SPX and the DAX. Sure. Let's segue into some of these CFDs. So here's what some of the equity indices look like. SPX. Again, I don't follow this intraday, so I don't have a scalp on it per se. But the levels have still been pretty good. So the level we closed at yesterday was actually an exact 50% retracement from the advance off that low. Hate using the spike low, but still responding. So we'll watch it for now. That comes in at 119.14. The level that you see here at 1940 that we're testing back as resistance is the 618 retracement of the advance off the lows that you made from October of last year. And certainly these levels we've been watching all throughout the course of the descent. So, if we break here, a move back into 1978 wouldn't be outside the realm of possibility. Remember, after these moves, you're not going to just get continuation lower and or a complete V recovery. You're probably going to see consolidation here for a little bit. This is still the range to beat, okay? To undo, as it were, some of the bearish sentiment that's surrounding equity global markets, or specifically here in the SPX, we would need a break back above, basically 1980 or 2000, the former median line parallel, as well as the lower median line parallel from that ascending structure. So we would need to clear this to get back on the constructive side for the SPX. You're still at risk. You're still at risk. And for anyone who's super bullish SPX here, I would just have them look at the momentum profile since the start of the year, guys. This is the deepest momentum break into oversold territory that we've seen since 2011. So what happened there? Well, we actually came into a major low, capitulated, tested the low, went even lower before we started to move right back up to the highs. What about previous to that? Well, basically, you're heading into pre-financial crisis, and those are the lows that you made in 2002. Again, came into oversold territory. You rallied hard for a couple of days, which is what we're doing right now. You came back to test the lows, even dribbled a little bit lower before you're off to the races again. So, we're not out of the woods yet. We're not out of the woods yet. And it's funny because the market right now has a very short time frame, or what's the word? When we can only remember really near-term stuff. You know what I'm trying to say. Attention span, very short attention span. So it doesn't matter that we lost, X percent here on the drop earlier last month. You have a 2-day rally and everyone's okay. Yeah, we're going back into 2150. It doesn't work that way, right? It doesn't work that way. So I would be mindful of this. There's a resistance trigger that we've been watching for a couple of months. If we break through this region and mount 50 again, sure. Let's just look right back towards 2050, the upper median line parallel off the highs. As long as that stands, I'll be watching for near-term resistance here in 1940. If we break into the U.S. Open, 1980, 1978. But, I really wouldn't be expecting anything besides more back and forth. Heading into Friday might be a game changer if we get a big deviation off the expectation. All right. And specifically with inflation continuing to lag, if the employment numbers come out softer, that's the real big risk that the Fed really might have to put everything on hold until next year. What else did I want to say on that? Mark, does that help? Yes, he says 1978 would complete the inverse head and shoulders. What time frame are you looking at with that? On the 30-minute. Yeah, I see it. I see it. Someone else pointed out this to me as well. I try not to put too much emphasis on real near-term structural formations like head and shoulders and whatnot because, I don't know, I'm more of a momentum trader through these levels. Do you know what I mean? So I will not really tend to stress those near-term formations just as much because I've seen them break, I've seen them reverse time and time again. So, but it does look pretty good, especially if we get a break up to the upside here. It would be a nice objective target. Mark says, yes, thank you for the daily chart. Took the screenshot. Right on. Cheers, sir. Eileen says, general thought question. Have asked this before, but last week really threw my steadiness off, watch and wait, etc. On a breakout continuation of a direction, how far into the pullback reverse to wait for the entry into the moving direction without chasing? Enough pullback for a stop area and miss the move until get that later. I'm not sure you're saying enough pullback for a stop until that later. So Eileen, I think what you're trying to ask here is, I think what you're trying to ask here is this. I think Mark's trying to answer you. 618 is the ideal move. Yeah, a retracement of some sort is going to be the ideal move. Eileen, it doesn't necessarily always need to be a fib. Some pullbacks will only stall out the 38.2. A lot of moves stall out at the 50% retracement. But the 618 is obviously going to be your ideal, the golden ratio. That being said, it's all about the structure of the advance, Eileen. Every trade is going to be different. I can't just give you a blanket statement and say wait for the 50% on every pullback and then try to play it. Also, Eileen, you're leaving out a big thing here, which is momentum, right? So if I'm in an upside break, oh, I'm using the other screen trying to show you. If I'm in an upside break, um, by the way, dollar yen looks like it's giving out a trigger here, but we're just coming into support. So let's see if we can get that stretch higher on this. But if the upside break happens like this, right, and you want to know where to get long on the pullback, it depends on what the structure is, A, and B, we want to watch the momentum. So this break here on the pullback, look for a long trigger. Very simple. Keep it simple, Eileen. There's no need to complicate things. On this pullback, by the way, this would have been the trigger I was looking at. And certainly on this break, it would have looked like it was faking out to the upside. On the pullback, you can see that we broke just below 40, and then here's 60's resistance. So on a move like this, it would have been a fake out. But had we seen or waited on the entry with a little bit more patience for the pullback into the 618, okay, for the pullback into the 618, you can see that that's where we dipped off, came 618, held a support again, trigger break to the upside. This is the long entry against the low. And then you're playing in the direction of the broader trend. Does that make sense, guys? Nothing supersedes basic support and resistance. Nothing. Nothing. Okay? I don't care if it's a fib, a moving average, uh, overlay indicators, standard deviation lines, Bollinger Bands, whatever you want to call them. So kind of a quick walkthrough here, the methodology of sort of the anatomy of the scalp. So Eileen, I hope that helps. Okay, that helps. The 618, the trigger is momentum for sure. Missing the entries, wrong entries, etc. Can always see it looking back, but not when it's happening. Yeah, and that's the trick. I understand 100%. It's easy for me to go back in price action, guys, and just identify, oh, we should have done this here. Actually doing it in practice, that's just going to be, that's going to just take time and persistence, guys. One of the major traits of, successful traders is persistence, relentlessness. You get knocked down, you stand up, brush your shoulders off, and get right back on the saddle. So wait it out. A lot of times, as soon as I see a pullback into a trend that I'm trying to get on, the first instinct is, oh, okay, this is where I want to try to press the long. Yesterday, it happened in Euro Pound. Let me actually walk you through this. I was sitting next to my colleague David Song. Euro Pound, he was sitting in a short, and Euro Pound was coming into this median line. So right off the bat, I'm with him. I want to be on the near-term short structure. This was against those swing highs that we made post that insane rally that we made early last week. It was the median line to the highs. I wanted to take this short here. Remember, Euro Pound, really tight ATR. So I'm only looking for 20 pips. But this was right ahead of the open. So he was in a short position already. The U.S. markets came online. We got an opening range break to the upside. Okay. And then here is where we talked about last night. Waiting it out. Now we have divergence into the highs. Now we had a trigger break. A little bit more conviction that we should try to play this short. Now, when am I going to look to buy back into this? If we're in the broader trend, same thing. Here's the 618, and I'll be looking for those resistance triggers. We do the same thing back on the 5-minute chart. It's the methodology, Eileen. Once we drill that in, you're going to be walking through these on every trade, whether it's an hourly chart, whether it's a 5-minute chart, whether it's a daily chart. All right. Bernard, haven't forgot about you, buddy. We'll take a look at the DAX. Mario says, beautifully explained. I appreciate that, Mario. Hope that helps, brother. Good seeing the room as always. Persistence, relentless, and wait. Cool, says Eileen. All right. All right. DAX for Mr. Bernard. Here's what the DAX looks like. So the only thing I've really been focused on with this is the median line that me and you have been talking about. Bernard, for some time, and that's off the highs from July and August. It's still in play, and in fact, you saw that rally come right into that last week, into the 618 extension off the high, or 1618, excuse me, which was right alongside that median line. This is still resistance. So for today's rally or today's move higher, we'd look for some resistance somewhere around 10,200 is where the median line would come in right about now. Um, Near-term support, this was a slope line off something. Okay, I'm not sure where I derived that slope line from, but it doesn't look like it's too much of a player right now. Stand by 1 second, Bernard. Let me just see what this looks like. Okay, it's going to start getting really messy on the chart, so I don't want to make this too much of a complex setup, but I would be watching this just on account of the reactions that we gotten off the actual median line. Caught that low pretty nice. That was the onset of the drop off. And again, the upper bounds here, all collecting, all lining up with a sort of a group of cluster slopes that we've been watching for a couple of years now off the lows. So look, the major resistance or the major support rather, or near-term support, I should say, still going to be around that 9,800 level. Resistance, watch that median line off the highs. You could actually play a long here if we do break, but this would have to be the near-term bearish or the medium-term bearish invalidation. Even if we rally into 10,400, guys, it's not going to be, constructive in my view. In fact, that would just be a test of the median line. All right. So, Mr. Bernard, I know that you love this, you love the DAX and you've been trading it. That's what I'd be looking at right now, man. I hope it helps. He says, thank you. Very helpful as every day. Cheers, Bernard. Always good seeing the room, man. Hussein says, Mike, oil, please. Coming right up. Here's what U.S. oil looks like. Whew, what a rally, huh? And it's funny because you had one setback on the back of a 3-day rally, and everyone started coming out saying $28 oil again. Look, when you get these strong reactions off of major lows, it takes something really special to just slam it right back into it. So would expect to see some more chop back and forth. You can see the overlap here of the 236 off the highs and 50% off the lows, right around 43.50, 43.58. We almost rebounded off that today. The low was 43.85. So wouldn't stress this 38.2 any longer. And for crude, I just want to make a base and a move higher or something, another turn, so I can start to tack on some trend lines. As it stands right now, you have no bullish slopes. You have no bullish slopes, at least on the daily chart. So I can't really validate playing the long side. At the same time, trying to play the shorts, you're nowhere near resistance on the back of yesterday's drop. So what the heck do? You tie up your hands together, you sit on them, or you do whatever you need to do so that you don't need to um, get involved in this. I guess a look at the near-term picture might be a little different. You might have some structural support on the advance off the lows here, but it's just not a trade for me, guys. I know that a lot of you are looking at it. It's making a lot of headlines these days. For me, I feel like it's going to probably be one of the biggest fake outs, and it's going to cause a lot of pain for people. So watch out. If we break back below 43.50, we're right back on the short side of the trade. Right now, just the most near-term decline off the highs. I guess this is the retracement I'd be looking for. 50%, 6.8 coming right up into 46.50, 47.20. All right. A little mini breakout here. Look for that 47.20 level. I mean, what are you watching this 50? Hope that helps. Hussein says, thanks. Anytime, man. Anytime. I'd rather use this as a barometer for other trades. We'll follow all these instruments, guys. Doesn't mean just because I tell you I'm not trading it, doesn't mean we don't follow it. Absolutely. We have to follow this on a daily basis so we know what the broader picture is saying. But implications for what? Dollar CAD, right? Something that's a little bit more oil sensitive. Um, well, let me take Kelly's question first. Oh boy, I hope I'm not losing it on, I'm not losing it. Radio man, I did sleep through the sterling yen fake. Maybe I'm getting old if I did, says Kelly. I haven't forgotten. Sterling yen. I mean, you tell me, Kelly, what are you trying to do with this? It's got a much huge ATR, 226 per day, pips per day. So I'm not really actively trading this. At the same time, the sheer magnitude, speed, and size of the descent has me completely, you know, on the sidelines here. Um, yeah, I mean, I don't even know. I don't even really have a setup on this. I have key levels I'd be watching. You're back below the yearly open. That's the first major thing I'd highlight. Um, You're back at the 618 retracement of the entire 2015 range from low to high stretch. Um, Kelly saying, I was looking for 184, but if it's not any good, I will pass. Looking for guidance. 184 on the upside, yeah, watch that trend line resistance or watch that median line. We've gotten some reactions off it. Here's the support, breakthrough, instant resistance. It's already called the high so far in this stretch. So you could see 84 again. Let's look at the near term for you. Looks like you're just looking at this near term, right, Kel? Um, she says yes. All right, cool. Let me just. Oh, there it is. Sterling yen, 30-minute. Well, you have a topside trigger that looks like it's about to give out or is pending. So let's do this. Off the weekly high, that looks like it's being tested right now. This would be the support trigger I'd be looking at. Okay, so you have a couple things that are working in your favor and a couple things that aren't. Um, I'm not sure how you initiated the trade. If it was on a short-term trigger, we can check to see if that actually panned out to anything. Sterling yen. Ooh, really nice short-term trigger, actually. Multiple touches. And that's divergence into a short trigger. Interesting. Interesting. Remember, divergence can be made with equal lows in the momentum oscillator, not the price. All you're looking for is that the oscillator is not confirming a new extreme in price. A new low is a new extreme. New low is a new extreme. This holding the lows was your first indication that you're about to see a pop. Trigger break to the upside subsequent is the entry. Stop against the lows, looking for about 57 pips. So I do think you see 84. You're 3 pips away right now. So look for that 84 near term. I would say you might have a little bit higher to go, 84.25, 84.30, the highs that we made from yesterday, and that median line gives you a little bit more upstretch. If the 30-minute candle closes above this, Kelly, I think you have the room to wait for that 84.35 level, which was that key 1618 extension off the highs, if I'm not mistaken. It's the 100% extension off the highs, excuse me. Does that make sense? Patience is easy. Thanks, says Kelly. I have a load of pips success with this pair and like how it runs if one enters it right. Only looking to see your levels to score. Well done, Kelly. If it's working for you, hell, it's got a hell of an ATR rather at 57 pips. These are my favorite plays. Pairs that have somewhere in the range of like 40 to 50 pip ATRs, or quarter ATRs that is, typically are the ones that I'll be all over. 60, 70 now, you got to be a little bit more have a little bit more confidence in the pair before you jump in. Okay, guys, U.S. markets are coming online, so I got to run. SPX is running higher, says Mark Haverman. Do we break through that resistance? Nah, watch 1940, man. Watch 1940. We're heading into that right now. If we break through, watch if we run into 1978. That's the first area, the bottom zone of this major critical resistance. And again, we'll be looking for that to hold in order for the broader bear trend to remain in play for the SPX and broader risk. All right. Guys, we'll wrap it up there. Have a great day. We'll see you tomorrow morning. Again, ECB is on tap, so on all the Euro crosses, keep it in mind. Stay prudent, and we'll pick things up tomorrow as Mario Draghi takes the mic. We'll see if we have anything new from their side of things as sentiment continues to deteriorate here on a global scale. Best of luck trading. We'll see you tomorrow. Cheers.